Thank you so much for joining us today. When it comes to the People's Congress today in China, I know it'll be a firm focus of yours, as it will be many people today. What are you watching for?
The main things that I'm really looking for at the moment are predominantly towards their GDP figures. I mean, the GDP number really anchors away at the rest of their fiscal and monetary policy. So I am really concerned and interested about whether they actually do set a target or if they're going to try and reduce that target to be below sort of 3%. Naturally, if they do go below that sort of 3% range, it gives us an idea of where we can expect their debt levels to perhaps carry over to, and hopefully have some unavoidable debt that they're really going to have anyway.
When you talk about GDP, though, there is a talk that they may ditch their target altogether. It's been discussed this year a little bit. Do you think that will happen? And if it does, what does that say to you about China going forward?
I mean, to me, I think there is a high possibility that they may, in fact, actually ditch that target altogether. And if they do, it really means they're going to be looking towards 2021 as opposed to considering what happens for the rest of 2020. So they're going to migrate their targets and look at everything else towards getting their economy back on recovery. Naturally, their unemployment figures and the claims towards that are going to go as well. And this year was meant to be a really important year for them in terms of that poverty alleviation sort of side of things. So the fact that they're going to have to bypass that, it's not going to bode well for the Communist Party in China, and there's going to be a variety of other factors that are really going to impact on that extenuating circumstance from the GDP itself.
I want to ask you about Australia because I sort of want to bring this home, right? We're watching recessionary conditions in Australia now. What is different about this time than what we've seen in the past? Because obviously in the past decade, we've pushed past recessions. We've managed to bypass recessions the rest of the globe has seen. Why is this time different in your view?
Right now, I think over the past decade, one of the big things that's really contributed towards Australia being almost recession-proof has been around their idea of having a large amount of population growth, predominantly through immigration. We've also seen a lot of housing sort of demand coming on that and a housing boom generated behind it. Plus, obviously, construction has come with that as well, with the need to build more houses. We've also sort of had really strong economic policies. So putting all of those together and then adding in the fact that we've had China trade being the predominant forces for our exports, it's really helped sort of starve off any recessions that have occurred in the past. Now, what we've got now is an issue where three of those things on that list are just simply not going to be there. We have rising trade tensions with China. We've had exports banned when it comes to the meat side of things. We've also got tariffs being placed on barley, with speculation right now that there could be more tariffs placed on wine and dairy. So that is really going to hit hard on the Australian GDP side. Naturally, not having immigration side of things and population growth is already set to fall. I believe it's already fallen about 30%, and they're expecting it to fall obviously more over the year until sort of lockdown and borders really reopens. So that side of things then travels down into the housing side of things, and it migrates across. So we might start to see fall in housing prices and a variety of other functions that really help build the economy here in Australia. Naturally, our natural resources haven't been hit yet, but hopefully they don't, and there aren't any tariffs laid on that as well.
So if we do see a recession, do you think it will be short-lived then?
I think we are in a position here where it could be very well short-lived. I don't think we're going to see a V or a U-shaped recovery, which has been speculated in the past. I think it is going to be a long, drawn-out process. I would anticipate that by the sort of second quarter of this year, we might start to see some early signs of recovery. But the real impact that we've seen from coronavirus so far and the global shutdowns haven't really been realised entirely just yet at this stage. We are still going to have rising unemployment rates to continue. It is expected to sort of hit about that 10% mark towards the end of this year. So hopefully that doesn't occur. But if it does mean that we are going to be in a significantly different position to what we were a decade ago during the 2008-2009 crisis.
So how do you rate how the US is tracking right now? Because there's a lot going on there. They're obviously, election year, there's trade wars, which are also affecting us, but there's trade wars center stage there in the US. Plus, they're still somewhat of an epicenter of the virus, yet starting to reopen the economy. I mean, they're in a very different position to us. Markets continue to trend higher, as we know there, different trajectory than what we're seeing the economy track on. What's your take on the US?
I mean, I'm finding that there's been a little bit of a dislocation between what the boots on the ground are sort of telling us versus what we actually see in stock markets. And I feel that a lot of that is actually coming from or generated by the massive stimulus they've done. There's 14% of their GDP, or nearly $3 trillion in stimulus going towards their economy, but it's not hitting on the bottom level. I mean, I read a report just, the other day that was basically saying of the 2.5 million sort of unemployment claims that they're seeing in California, because of such a backlog, they're only getting to they've only sort of ticked off about 200,000 people on that list so far. So that means that there is a massive number of people that they're just not able to process the flow on how many people actually need the money in their pocket. And in the differences between what we've seen before in 2008 compared to now, I mean, in 2008, it was kind of a top-down liquidity issue. Now it's really a bottom-up problem, and it's coming around from that consumer spending. I also sort of am looking at the sort of trade war side of stuff that's really going on now. I mean, we were having issues with that between China and America before, but now the tensions are rising. We've got the US antagonizing the situation on almost a daily basis. So that is certainly pushing the barrier for what might end up being a good scenario. When it does come to them being in the epicenter of COVID-19, it's likely going to continue. We might see some more figures in the number of 1,000 deaths per day if we do get another second outbreak. Of course, those numbers are still remaining today. And New York has been unable to sort of contain that side of it. They've been pushing on trying to get economies reopened. I'm not sure it's going to work well for them. But naturally, what we hear from Steve Mnuchin and of course, Jerome Powell are that they are expecting worse to come before it gets better, and that they are expecting a sort of a slower recovery. But nonetheless, when it goes down, it has to go up eventually, is what they're sort of saying.
Well, yeah, and Donald Trump's made it clear overnight, if a second wave infection happens, they're going to continue to reopen the economy. They're not going to reinitiate lockdowns. Also hearing from US Senate Republican leader McConnell in a Fox News interview just not long ago, saying the next corona stimulus bill not too far off. So that continues on what you're saying there about stimulus. If we see even more stimulus, another stimulus bill, corona bill, do you expect to see markets just continue that upward trajectory even higher from here?
I think I do. I mean, when it comes to the sort of stock market side of things, I am anticipating. I mean, the stimulus is really pushing the growth that we're seeing at the moment. And that disconnect is a problem. I mean, we've seen commodities disconnect from stock markets disconnect from currency markets. So not everything is working in sort of tandem at the moment. And that is causing, a number of issues. If they do start to push towards this idea of having more stimulus going again and trying to restart that economy and pushing ahead, as Trump is sort of saying, I'm not sure it's going to have the big, strong push for the actual economy as they're expecting. The rest of the world has got lockdowns going on. That doesn't mean that the borders are going to open up everywhere else for them. You can restart the economy, but if the demand isn't there, then you're really pushing up a hill without much effort.
All right, Alistair Schultz, really interesting discussion there. Thank you very much for joining us on the program.